Hey everybody, it's Eric, and if you have ever thought about buying down the interest rate on your VA loan, you're going to want to watch today's video. Now, when you get a VA home loan, your lender, hopefully that's us at low VA rates, might ask you if you would like to buy down your rate or purchase discount points. We're going to talk about that today in this video, and I'm going to explain to you what this means and explore some reasons why you might consider it or situations where you might not want to do that. It's Friday, guys. I'm wearing red. I hope you are too. Every Friday here at Low VA Rates, we sport red swag, as we refer to it. Red stands for remember everyone deployed. I wish it meant remember everyone that's ever been in the military. That's what it means for me. If you have love and passion for our military, please, every single Friday, put something red on. Doesn't matter if the rest of the world doesn't know. You'll know, and I promise you, many of our men and women in the military will know why you're wearing red. So, speaking of red, let me remind you, make sure you click that subscribe button down in the bottom right corner of whatever screen you're staring into right now so that you can be part of our kind of online family and get information when we're pushing it out. I want to start today talking about what buying down your rate actually means. It's pretty much what it sounds like. You're paying money in addition to what you would normally pay in order to get an even lower interest rate. So money, I'll put extra money for a lower rate. That's ultimately, in its most simplistic form, what buying discount points or buying down your rate would mean. Each discount point you buy costs 1% of the mortgage amount. I want to get into that, for example. $250,000 loan amount. Now, that's also assuming, guys, that you want to pay a full discount point. Perhaps you're only going to pay a half of a point. But for our example, if your loan officer is saying, well, yes, Mr. or Mrs. Smith, if you would like to go from a 3.5% standard rate to a 3%, that half point drop is going to cost you a discount point. So one discount point is the same as 1% of your loan amount, which in this case is $2,500. Okay? So simply put, if you'd like to add an additional $2,500 in closing costs, we can lower your rate by, in the example I just gave, a half point. Please do not think, well, I paid 1% in discount points, so I better get a 1% decrease in my interest rate. There is no correlation there. That's not how it works. For most lenders, a single discount point usually lowers your interest rate by around 0.25%. Okay, so I'm just going to write this here. You're at a 3.5%. That's the going, in the industry, we call it a par rate. You call us up, you're trying to get into a mortgage today, you're offered, let's even go a little bit lower. I think today, if you're a solid borrower, you might get a 3.25% interest rate offered to you. Okay? But if you would like to pay this 1% discount point, the lender might say, I'm going to lower you to a flat 3%. So you paid a full point to get a 0.25 point lower. Now, you've got what I hope is a basic understanding of how discount points or buying down your rate works. Let's talk about how you can figure out if it makes sense or is actually the right choice for you at this time. I'm going to clean up my whiteboard just a little bit in case I get crazy and want to start writing down more examples for you guys. The first thing I want to do, even though we've talked about it a little bit, is talk about reasons why it might be a good idea to pay points. Well, like I said, the main reason most people want to do it, number one reason, lower rate. We all like low rates, hence our name, low VA rates, okay? But you've got to, it's not always obvious if that's the best thing for you to do. The most straightforward benefit of buying down your rate, like I said, is a lower interest rate, which is going to give you a lower payment. So having a lower rate, even if it's just a fraction lower, does save people money every single time they make a mortgage payment. Now, you might not really notice it much on your monthly payment when you look at just a 0.25% decrease in your rate. But it does have a very large impact on how much interest you will be paying especially over time. I want to go back to that previous example that I just had up on the board where you bought down for 1% your rate by, a 0.25%. So $250,000 mortgage, okay? That 0.25% lower, going from the 3.25% to 3%, that's going to cost you $2,500. It's going to lower your payment, by $35 a month. It's going to save you $12,000 in interest, actually a little bit more than that, over the life of the loan. Okay? $12,000. That's a lot of money. You paid $2,500. Remember, 1% discount point in this example is $2,500. Pay $2,500 today to save $12,000. On the surface, sounds like a great idea. We're going to talk about when it is a good idea and when it might not be a good idea. But I'm keeping it simple right now. Reason number 2. So on number 2, I want to talk to you guys about something that I'm not going to give you expert advice on because I am not an expert. But there might be some tax benefits by buying down discount points. You're going to need to talk to a tax guy or a girl, somebody that does taxes for a living. You're not going to get that information from me. But closing costs on your mortgage, discount points are closing costs. It's essentially allowing you to pay interest up front for a lower interest rate in the future. Well, because mortgage interest can be tax deductible in many accounts, prepaying it with discount points suggests that you might have some tax advantages or deductions as well. That's as far as I'm going on this because I do not want to get into the realm of giving you advice on your taxes, but consider there may be some benefit. Number 3, why would you want to pay discount points? Well, this is an important one. Be in the home long time, okay? Just shorthand today. So basically, when you buy down your rate with discount points like we've talked about here, you're paying more money today up front in order to save even more money in the long run. That means discount points can be a good idea, and they become an even better idea the longer you plan on staying in the home or keeping that mortgage, is also a better way of saying it. So this allows you to extract the maximum long-term benefits of that lower interest rate if you stay in the loan or the home longer. It makes paying that upfront cost more worthwhile. I want to go back to this example of $2,500 in discount points paid up front will save you $12,000 over 30 years. Okay? That's right there. Now, if you weren't going to stay in the house for the full 30 years, there's a calculation that I might get into later or in another video called a break-even analysis that we can determine how long do I need to stay in my mortgage to justify this discount point for the $35 a month in savings. Another video or another example if we have time. Reason number 4, you've got extra money. Why would you want to pay discount points? I'm going to come over here. You have excess money. I don't mean excess like, oh, I've got all the money in the world. It's just you're in a situation where you can actually say, I've got the money today. I may not have it in the future. So I would like to take advantage of securing $35 a month in savings by paying my discount points. One benefit of VA loans, and it's probably the biggest benefit in my opinion, is you do not have to have a down payment. But if you've been saving up your money, you could choose to use it to buy down your interest rate, which is what we've been talking about this whole time. If you decide not to buy down your interest rate because it's not required, you could still use that money as a down payment, which does have the ability to lower your VA funding fee on your loan. Now, you're going to need to go crunch some numbers to see which one, a smaller funding fee or discount points for a lower or reduced rate, is going to have the biggest impact on your situation. The one exception would be if you're a disabled veteran. Since disabled veterans do not pay a funding fee, the extra cash that you've saved up, what would you use it for? Well, one option, as we're talking about today, would be to purchase discount points and get yourself a lower interest rate. Now that we've talked about reasons why you might want to buy down your rate, to be fair, let's talk about reasons when it might not be a good idea. Need to clear up some space on my board here. These are reasons which you'd want to do it. Now we're going to talk about reasons where it might not be as appropriate or beneficial. Sorry, this board doesn't get completely clean, but that's okay. Reason number one, why you wouldn't want to do it? Already low enough rate. You've got great credit, interest rates are amazing. You've already got a low interest rate. You've got great FICO score. You've got a great situation, and there's really no better rate out there for the time being, so you don't need to do it, right? And as we've talked about, VA loans, generally speaking, have much better rates than conventional and other types of loans, okay? However, if you still want to try to get a lower rate, you can always shop around and get lenders competing for your business, which we teach all the time here at Low V Rates, and bring that rate possibly a little bit lower even without discount points. Reason number two, and this is, in my opinion, we should have made this reason number one, but reason number two, at least the most important, oh, I forgot the one there. Reason number two, you're not going to stay in the loan or the home. A lot of times they go hand in hand for long. So I'm just going to put short term. It makes no sense in most cases to pay discount points if you're going to be in that mortgage or that home for the short term. We have a lot of active duty service members that come to us for mortgages. There is a very good chance that they will be PCSing in just a few years. Maybe you know that you plan to sell the home when you are going to PCS. In that case, then buying discount points simply isn't going to make sense in most cases. Let's go back to that example. It's cost you $2,500 to save just over $350 a year. You're going to be in the mortgage for 3 years and then PCS and go. What have you saved? Like $1,000, but you've paid $2,500 to get there. Real simple. Short term, not as beneficial to pay discount points. It's also true if you plan on keeping the home, but refinancing it with a cash out refinance or a streamline. Once that mortgage is paid off, all the closing costs that you sunk into that mortgage, like the discount points up front, all get wiped out because you now have a new loan. So that's why I do take the time to say short term in the home or short term in the loan. You know, anyone buying a house right now, okay, 2022, interest rates are on their way up. We've got a war going on. We've got inflation. Interest rates are going up. Well, they're probably going to fall somewhere in the next 2 to 5 years. I don't have a crystal ball, but most economists, and if you've watched history, rates go up for a couple of years, then they come down for quite a few years. If you're buying a house right now, there's a very good chance you're going to refinance that with a VA Streamline refinance at some point in the next 3 to 5 years. Okay? Here's the good news. You can always calculate the point at which buying, I mentioned this, I might get to this, right? The break-even point. There's a calculation that you can do to determine when it makes sense to buy discount points and when it doesn't. Okay? We're going to get into that here just momentarily. All you have to do is divide the cost of the points with the monthly savings. I guess I'll just do it right now because it's not that detailed. We said the points were going to cost $2,500. It's going to save you $35 a month. So if you take the $2,500 in discount points, that it's going to cost you to get that little bit lower rate. It's going to save you $35. Guess what? You better be in your mortgage for 71 months in order to have the cost of the discount points justify the savings. Every single month after month 71 is money in the bank, and it now has made sense. Now, that's mathematical. Let's say $35 a month right now means the world to you. You know you're going to get a raise 6 months from now from your employer or a year from now. Those are cases where mathematically it would suggest don't get discount points because you're not going to be in the loan for 71 months, but I need the $35 a month now. That's why it's not black and white, but understand you now are an expert on calculating break even. Break even, take the cost divided by the monthly savings. Whatever comes out, that's how long you should stay in that mortgage in order to justify paying the discount points. Now, this one might be obvious. I want to get into number 3. Why would you not do it? Can't afford it. Okay, we talked about when you might be able to afford paying discount points, so this is just the inverse. If you do not have the extra money saved up, especially on a purchase because you cannot roll discount points into your loan, you have to have the cash, then instead of putting that extra money into the loan, which you don't have anyhow, or it would be a very big stretch, it's likely wiser to take the little bit higher rate and put whatever money you do have into an emergency savings fund or a rainy day fund or something like that. Now, we've talked about this in prior videos, but being a homeowner often comes with lots of unexpected costs. You got to have that rainy day fund or that safety net in place for when these things creep up. Now, in addition to building your savings, there might be better uses for your money. Like I've mentioned in the past, get with a guy or a gal that you trust for investments. See if they say, hey, look, instead of paying that $2,500 towards your mortgage for a measly $35 a month in savings, we can go ahead and turn that $2,500 into a lot more than $35 a month in growth. Again, that's up to you to discuss with an expert. I'm not the guy to give you that advice. Reason number 4. Why would you not want to pay discount points? I love this example right here, or this reason. I kind of alluded to it a minute ago. You see in the near future, interest rates coming down, and you're already planning ahead of the game to take advantage of the interest rate refinance reduction loan, the streamline loan, or the EARL. We've got lots of videos out there about that mortgage. Keep in mind, again, if you're buying a home in 2022, you are getting higher interest rates than anyone that bought homes in 2021, 2020, and probably even 2019. That's the bad news. The good news is this program will always be there. And so instead of trying to pay thousands of dollars now in discount points, just kind of take it on the chin, if you will, get into that dream home. We'll help you get in there. And know, as soon as interest rates start to drop in the future, you're going to be able to secure through the streamline a lower rate. Okay? It's a great way to take advantage of the market as soon as interest rates start to come down, which they always do. So while we recognize that, yes, there are situations where buying down your interest rate on a VA loan makes sense, in our opinion, for most veterans, when you're buying a home, this is my specific kind of caveat here. When buying a home, it's generally not the best thing to go out and pay points for a lower interest rate. Different, I might give you a little bit different input on refinances, but again, like I just mentioned, you're going to be able to streamline your purchase mortgage at some point in the future when it's beneficial and take advantage of those lower interest rates without having to put up money up front. And just, talk to us about it. Talk to your loan officer about it. Even if you're going with one of our competitors, which sometimes I say, don't go with the competitor until you've talked to us. We can help you determine whether or not you should be paying those discount points. Thanks for watching. Enjoy your weekend. This is Friday. I'm wearing red. I invite you to do the same. We'll see you next week.